Hi, this is Charles Threet with Threet Retirement Planning. Today I'm going to talk about the new One Big Beautiful Bill Act and the provision for the overtime. They were talking about doing an exemption from your income if you were working overtime of $12,500 if you were single, or $25,000 if you were married filing jointly. They're not going to exempt a bunch of your overtime income. What they're doing is they're actually just giving you a deduction. And let me explain how the deduction is going to work. The first thing I want to show you is what is actually deductible. So in the example that I'm giving right here is you were making, let's say you make $30 an hour on your regular pay, but you're making $45 an hour on overtime. So here's the thing. They're not going to exempt all $45 an hour that you were making on overtime. All the overtime is not what the deduction is actually going to be based on. The deduction is going to be based on whatever the amount is over your base pay. In this case that I'm showing you, it's going to be $15. This is what's going to be deducted. Okay, so let's just say, for example, just say you work 400 hours of overtime for the year while you were making that $15 extra, right? So you actually created a $6,000 deduction for the year. So what does that mean for you? Now I'm going to give you three quick examples of about how that's going to affect you and what it's going to mean to you. It's going to save you about $600. If you're in the 10% bracket, it would be about $600 back in your pocket if you get a refund, or it'd be $600 less in taxes. Let's say you're in about a 15% bracket, it would be about $900. Or at 20%, it would equal about $1,200. Okay, so I wanted to explain this to you so that when it comes tax time and you start having your taxes prepared, you have the expectation that you're going to get some of this money back. Here's my final thought. This is not what I think most people were expecting. They're thinking that they were going to have so much exempted from their overtime pay that they weren't going to have to pay any federal income taxes on that money. Unfortunately, that's not the way this is going to work. You're just getting a deduction, which is still not going to be bad. It's still good. It's better to, I have the opinion that it's better to keep as much money in your pocket as possible rather than giving it to the Internal Revenue Service, because I believe that you can do more with that money than they will. So I just wanted to explain this to you so that you would have a clear understanding of how this is going to work, so that when you do have your taxes filed, that the expectation is set. Okay, I know what was put out there when they were talking about this bill, but unfortunately that's not the case. You are going to benefit from the bill if you work overtime and you're able to get a deduction for some of that, but you're not going to get to exclude that income. If you like the video that you just saw and you got some value from it, please subscribe to my channel, Threet Retirement Planning. You can go to Amazon.com and pick up a copy of my book, Retirement Done Right. I would appreciate it. I'll see you in the next video.